Shein aims to list in London in the first half of the year if it gains regulatory approvals for an initial public offering. That's according to sources close to the matter. One source said the IPO could be completed as early as April. The source added a visit to China by Britain's Finance Minister Rachel Reeves could help push the regulatory approvals Shein needs. Shein declined to comment, while Britain's Finance Ministry also did not reply to Reuters' questions. The London listing push comes after the online fast fashion retailer ended its attempt at a US IPO. It received pushback from lawmakers concerned about risks connected to China and alleged labour malpractices. Shein walks a political tightrope as it tries to show it has measures in place to limit the risk of human rights violations in its supply chain, while it also tries to avoid any direct claims about China's Xinjiang province. It's a top cotton-producing region where the US and NGOs have accused the government of forced labour and other abuses against Uyghur people. Beijing denies any abuses, and Chinese authorities have hit back at clothing brands that say they don't use Xinjiang cotton.
Fashion house Versace could soon have a new owner. Italian media reports say rival Prada could buy the brand from current owner Capri Holdings. Other fashion groups and private equity outfits may reportedly be interested, but the report says no value has yet been put on Versace, and there was no comment on the news from Prada. Capri also owns brands including Michael Kors. Last week, Women's Wear Daily reported that the US conglomerate was looking to sell off labels including shoemaker Jimmy Choo as well as Versace. That comes after Capri posted a bigger-than-expected drop in quarterly revenue in November. It was hurt by missteps across several brands, as well as a global slowdown in demand for luxury goods. The new reports say Capri has retained Barclays to help it find buyers, with Citi acting as advisor to Prada.
TSMC easily beat market forecasts with its fourth quarter sales. The world's largest contract chip maker saw revenue hit $26.36 billion according to Reuters calculations. That means growth boomed more than a third year on year. The Taiwan company scored big from demand for artificial intelligence. Its customers include Apple and Nvidia, and it's been at the forefront of the march towards AI. TSMC reported revenue jumped almost 58% year on year for December alone. The company did not provide details in its brief revenue statement. Other Taiwan companies have also reported strong fourth quarter revenue due to the AI boom. iPhone assembler Foxconn beat expectations to post its highest ever revenue for the final 3 months of last year. TSMC will report full fourth quarter earnings next week, when it will update its outlook for the current quarter and full year. The company's stock leapt 81% last year, but closed flat on Friday ahead of the release of the revenue numbers.
British markets are among the biggest victims of a global bond sell-off that spilled over into currencies and stocks this week. Yields on long-dated British government bonds are at their highest in decades. That's put government finances under pressure, while sterling is struggling and British domestic stocks are underperforming. Britain's Treasury says it will maintain an iron grip on the public finances and that UK bond markets continue to function in an orderly way. But benchmark 10-year government bond yields surged more than 30 basis points in 3 days to hit 4.925% on Thursday. That's their highest since 2008. Fiona Cincotta is Senior Market Analyst at City Index.
What we're seeing here is the impact of jitters over inflation, persistent inflation, and the fiscal outlook, which is unnerving investors. Not only are we sort of concerned here about the impact of inflation, which seems to be a bit stickier than expected, and the concerns of the inflationary outlook after the Labour budget at the end of October. But it also looks as if the Bank of England may not be able to cut interest rates as quickly as was initially expected.
The pound tumbled to a 14-month low against the dollar on Thursday, on fears surging borrowing costs will force government spending cuts. It's also lost ground against the euro. Traders are bracing for a wild ride in sterling, and some analysts say the currency may replace the euro as traders' currency of choice to sell short against the dollar. The bond sell-off has spilled over into stocks too. Britain's FTSE 250 index, which includes consumer, real estate and financial firms, is down over 3% this week so far. Market sell-offs can pose a challenge for governments, but the bond aspect is increasing the pressure on Britain's Finance Minister Rachel Reeves and could force her to cut future spending.